Focus. Ideate. Innovate. Enable. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Hello and a very warm welcome to Season 6 of Standard Chartered and CNBC-TV18 present India on the Move, a conversation series where we engage with thought leaders and industry experts in understanding new developments in trending industries. I am Mugdha Kalra. We talk today about tech startups and funding and the evolving role of banks. Tech startups have disrupted multiple industries and are in a phase of high growth, but also seeing a funding winter. In recent times, startups have also pivoted their strategies in line with the changed scenario. This includes taking steps to reduce the cash burn and moving on a credible path to profitability. Within this, banks play a critical role and have been working with the startups for effective cash management and transaction banking. In addition, banks also have been evolving in how they address startups' needs and risk management. Joining me today on this panel, Harsh Parekh, co-founder, Farmeasy Company API Holding, Mr. Amit Mukim, President, TAI Mumbai, Mr. Manish Jain, MD and co-head, Corporate, Commercial and Institutional Banking, India Standard Chartered Bank. Welcome, gentlemen.
Thank you.
Mr. Jain, if I may start with you. The role of banks and their involvement with startups, especially tech startups, has evolved in the last decade or so and in last 5-6 years as well. Which part of this relationship have you seen evolve the most?
Mugdha, you're right. The bank's role has really evolved with startups over the years. To start off, banks were really focused on creating digital, customized, tech-based collections and payments, transaction banking solutions for some of these companies, especially for B2C startups, which have high transaction volumes and reconciliation needs. This is what I would call the phase 1 of banks' involvement with startups. In phase 2, over a period of time, banks have started providing credit facilities to these companies. These credit facilities are largely short-term in nature for meeting working capital requirements. Now, banks have also started looking at term loans and acquisition financing for these startups. So, as this space has gradually got established and banks have started understanding it better, the product range and the risk appetite have grown.
Interesting. Mr. Mukim, how has the funding landscape changed when we talk about banks and VCs together?
I think the last few years, we are seeing as TAI Mumbai, which is a non-profit supporting the entrepreneurial ecosystem, to broaden the definition of what startups are, right? Earlier, we would have early stage startups, first-time founders who were setting up tech businesses, especially servicing the West. But now it's broadened and we celebrated more than 100 unicorns last year, right? So we've come a long way. Now, it's important to understand that through the journey of each startup, the needs are different, right? And while you need a lot of venture capital in the early stages, as you grow, your needs for working capital increase and you still rely on equity for some of those working capital needs. But as you scale further, that's when I think the point that Manish made is when the banks step in to actually support not only the growth journey, but other financing needs and how they could institutionalize the setup.
Farmeasy was started in 2012, 2015, the API company I'm talking about. And since then, e-pharmacy has seen exponential growth. But when you started, what was the funding scenario like? How have you seen the funding scenario change over a period of time?
No, I think, of course, I think the things have evolved over time. I think when we started, I don't think so banks understood what we were trying to do, especially if I had to speak on the banking sector, because the risk models were not evolved. I think I personally believe that every startup goes from a stage 0 to where we are, and the requirements will keep changing, right? So when you start off, of course, it's to do with day-to-day needs like transaction banking. And also it's a function of which industry are you in. A lot of news we are hearing about SaaS businesses. I think they need a lot of support, especially on the banking side, because you will have Forex, you will have a lot of other transactions. We went through that journey. We went from almost doing transaction banking to now working with almost all the leading banks because we have a working capital requirement. and to moving towards ecosystem play. So we've just launched co-branded cards and a lot of other transactions with a few other banks. I think so the whole journey has evolved really beautifully. And I think each startup will need to kind of go through that phase depending on which part of the journey they are in.
Mr. Jain, times have changed. We have an appetite for risk, but there is scrutiny at every level. What kind of credit underwriting criteria have banks put in place to assess the underlying tech startup company and the risks involved there?
As we are all aware, the companies in this space are hypergrowth in nature. That's the phase that they're going through in their journey, where they are burning cash in the quest for top line growth. So clearly the traditional way of assessing credit is not appropriate for the companies in this space, because they're still to achieve their profitability. And hence banks have been working on various alternative models to get grips with assessing the risk. At Standard Chartered Bank, we look at multiple variables and through that assess the risk. I mean, just to give an example, we look at the business model. What is the core need that the startup is trying to solve for? What is the irreplaceable niche that it has created for itself, in the process of doing that? And is the business model asset heavy or asset light? How much money it will need? Similarly, the equity funding stage, so Series A, Series B, Series C, while loss making, some of these companies have raised significant amount of equity, which provides a lot of comfort to the banks. Investor profile is another important parameter. Are they well regarded, and do they have deep pockets? Do they have a track record of repeat investments to support the growth? Cash runway is another thing that banks look at. What is the total cash available with the startups versus the monthly cash burn? Is the cash burn reducing or increasing? What is the ability and the timing of the next equity raise? Again, the cash throughput through the account that the startup has with the bank versus the credit limits. So if you look at, some of these parameters are very different from the parameters that we have in the traditional companies, and that is what banks are getting to.
When we speak of accessing finance, how are Indian banks helping startups? What has your experience been working with so many companies and so many VCs as well? And do you see them aggressively helping the Indian startup and entrepreneurs, to say, in India?
The short answer there is no. I think we have a long way to go, and there are reasons for this. The entire definition of what a startup is very recent to the Indian diaspora, right? Shark Tank raised the awareness of what a startup and entrepreneurship is at every household last year, right? Before that, we didn't even know. When we speak to startups, I think both on the banking side and on the startup side, there's a lot more awareness that needs to be created. Startups usually do not look at banks as the first point of funding. And I think culturally, as well as the point Manish mentioned on the credit framework, how this needs to be done, needs to be substantiated, because the dialogue for some of them and the need for that capital is so incredible during the startup stage that they need that hand holding beyond the money, right? And that they get from the VCs and the angels and everything else, right? But as they scale, some of the usual parameters we've seen is that you have to have a relationship for a few years, you have to have profitability for a few years. Some of those definitions at a broad level need to be relooked at. Right? Some of the banks maybe are doing it, but we can't generalize and say that all Indian banks are doing it.
As a founder, I would just want to chip in there. I think I completely echo Amit's view, because look, for us, it's also about the pace, right? I think at times, yes, we understand the complexity and the regulatory requirement, but we need to close that at a pace. So be it a tech integration, something which is key for any of this to work. The challenge here is, while yes, there is intent, but I think the technology systems are also evolving. And I think that's a big shift which is happening and which will still take time, right? So when our tech team starts speaking to the bank tech teams, it takes time, apart from, I think, the other challenges which I think we've already covered. So
I was just going to ask you that as a startup founder, what has your experience been while approaching VCs independently and versus approaching them via banks?
Of course, I think VCs give a lot of flexibility, and but as I think someone who's kind of gone through that journey, of course, banks is the cheapest source of funding out there. So it makes sense for a lot of companies to kind of work with banks. But I think the challenge is access and I think the pace. Are banks evolving? They are evolving. But can we make a general statement? Would be very difficult. But there are new banks, and I think the awareness on the founder side also. I see a lot of founders, a lot of companies at early stage still not sure of how they can explore the banking ecosystem, right? I'll give you one classic example. We do deliveries to almost every PIN code. My biggest pain point is to ensure that the cash collected by the delivery boy gets deposited. Right now, that's, I'm sure, a problem for like a bunch of folks out there. It took time for the industry to evolve to that reconciliation, and I think we've gone there. But as a founder or as companies, are they aware that these solutions are there? Maybe if you guys are building it in-house, which I'm sure banks today have these capabilities, and that awareness on both sides, I completely echo Amit's view that if that awareness on the both sides, it can just help a lot of people in the ecosystem.
I think one of the areas where banks are adding and can add a lot of value is especially SaaS-based and tech startups that are servicing international markets.
Harsh just mentioned, yeah.
And they need that support, especially when they are looking at clients across the world, because that's where the traditional equity-based models don't work, right? And some of these clients also get comfort that if you are partnering with a reputed institution back in India, it tells a lot about the stability of the company itself. So it's mutually beneficial there.
I think just to add, I think the compliance part of it, right? Most companies today raise foreign capital. I'm sure there's a bunch of compliance which need to be done. I think those are steps where banks have really helped us, and I think continue to help, because as a young company, these are things which we are not aware of, and we don't want to spend time on doing regulatory stuff. I would rather be spending my time and energy on solving the issue at hand. So I think those are areas where banks have really helped, but I think that awareness can really go up.
Well, let's stop here for a quick break. But when we come back, we look at the new trends, best practices perhaps, and also deliberate on the way forward for tech startups amidst the slowdown in funding. Stay with us.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Welcome back. You're watching Season 6 of Standard Chartered and CNBC-TV18 present India on the Move, where we're talking about the evolving landscape of tech startups funding. Before we took a break, we were talking about some of the roadblocks and challenges, but in the current economic scenario where we are seeing a slowdown in funding, what is your view on what are some of the classic challenges that startups are facing, and why is that happening?
No, so I think, look, every market has its own cycle. I think we are going through a more economic correction cycle, and I think the startup economy is well equipped to ensure a lot of people were focused on high growth. I think we are now saying, let's ensure we focus on profitability. Has the ecosystem and alternative sources of financing have evolved, right? So venture debt, a lot of bridge financing is now available. Everyone is fairly cautious on the equity side, but I think a lot of alternate options have evolved, and the good companies are still getting funded because good capital will always be available, and I think that is not an issue. Of course, banks being the preliminary lender are playing more cautious, and you will see some sort of challenges, but I think they've been practical enough. As Manish explained, I'm sure the risk frameworks have evolved. And if it's a company funded by good quality equity investors, we're not seeing any challenges. And I'm sure there are no much challenges on the early stage. I think a lot of noise about this is also for growth startups and not for early stage. Capital is available. And I think a lot of alternate sources, right? Venture capital, even banks have come up with far more innovative solutions in terms of bridge financing and all of that. So I think the whole financing model has evolved, and I think founders have also evolved to kind of be flexible with respect to the different options available on the table.
Taking that thread forward, Mr. Jain, from a bank's point of view, what do you see as some of the roadblocks that come in a startup's journey? And when you are consulting with them, you're also looking at where in their journey are they? As Harsh mentioned, startup, when they're starting the growth phase, it's perhaps easier, but when you are progressing, there are several challenges. And Amit also mentioned from that point of view that at every stage, perhaps there is a need for hand-holding. How does the bank come in at every stage of a startup's journey?
So when a startup is just starting off, clearly they need a bank to digitize their collections and payments and make it efficient. Their bandwidth is constrained. They're really focused on business growth. So they want a bank to take care of all their collections and payments, reconciliation needs and the works. Similarly, regulatory aspects. When they are raising equity, they need to be sure that they are in compliance with regulations. When they are going overseas, it is very critical to understand the local market regulations in some of these countries where banks play a significant role. There are several other areas where banks can support them. One is giving them access to a new source of funding. A lot of startups going forward will access debt capital markets, where they'll go for high yield bonds or term loan B issuances, where banks can support them, and that will be a very important source of funding. In this journey, startups also have to make a transition. In the initial phase, when they are dealing with equity, the conversation on the business plan is largely on upside generation. When they switch to banks, the conversation on business plan is also on downside protection. And I think that is a switch that startups also need to make to be able to get the banks comfortable. And this is what is happening. So both banks and startups are now understanding each other because they realize that in this journey, banks are a critical partner.
Do you see that as well? And what are some of the trends that now we are looking at in times to come?
No, I agree with Manish, and I'll link what Harsh mentioned. You see, what has happened is there are two things that have taken place. While the financing availability and the conversations have become more rigorous and stringent, right? It also implies that people are looking at the operational strength and the cash flows, which links back to what Manish is talking about, right? So naturally, and that is also happening with the maturity of the startup ecosystem. Today, if you have 100 unicorns and if you have 110 sunicorns, right, with a combined valuation of $400 billion, right, which was not there 5 years ago, suddenly the space attracts a lot of attention. That's one. Second is, you know, when Harsh was talking about the financing and, you know, what's really happening there, we see a lot of domestic financing coming in. Many funds are raising money from domestic markets as much as they were tapping the international markets, right? So a lot of localization is taking place. The startups today understand that the conversations they need to have is as much around growth and cash flow and sustainability as much about hyper growth and valuation and the big dream, right? Which is where I think, you know, when Manish talked about how banks are coming in and having those conversations becoming relevant.
We are seeing the Indian economy still being resilient in spite of what is happening, you know, around the world. In this context, what are some of the trends that you are going to see? And of course, your closing comments.
So clearly, I think going forward, what I see is that the space of startups, which has disrupted most of the sectors, is going to become an important part of the economy. It's already become part of our daily lives. As they become bigger and towards profitability, they'll be accessing the full range of products of banks. I spoke about digital transaction banking solutions and working capital. They'll remain top of the pile. But the banks will also access debt capital markets. There will also be requirements for M&A advisory. As startups start looking at acquiring other startups or brick and mortar companies, and the other way as well, where brick and mortar companies will start evaluating acquisitions of startups. Many companies will go overseas, as we mentioned. So clearly, the trend has set in, and this is only going to keep growing in future.
You know, and when we meet some of these entrepreneurs in Thai, while entrepreneurship is a choice, the lack of choices make you resilient, right? The last 2 years, we've seen a lot of struggle, to be honest. And, you know, we think that while we are seeing so much of exuberance, the reality check is that I think we need to improve both our hard and soft infrastructure in India if we want to get the best, because I see still a lot of energy being dissipated in things that could have been avoided and focused on business and growth and spending that time in actually innovating and being with people. I think India as a country, I completely agree with you, Harsh. We will grow. We have the best decade in front of us. I think we'll realize it much better if all of us play that role in making setting up a business, running a business easier than it is today.
Any ask from the industry and nuggets of gyan for the others in the space?
No, I think from the industry, I think on the banking side, I think what I personally believe is that if we have ecosystem plays, right, because if you have a healthcare expert or a financial service, I think that really helps. If you look at how VCs are versus banks, today VCs have a sector expertise. I think if banks can evolve to that, it'll just help a lot of startups, right? You get the best practices of the industry. You understand because the problems are then common. I think that's one key ask, at least whenever I speak to banks. If that can evolve into a very structured way, few banks are doing it, new banks are coming in. And I think for entrepreneurs, I'm sure it's a tough time, but I'm sure we'll pass this. And it's, I think, ruthless execution and prioritization. So it just boils down to that.
On that wonderful note, thank you, gentlemen, for taking out time and for those interesting deliberations and, of course, insights and observations. And thank you all for being a great audience. You were watching Season 6 of Standard Chartered and CNBC-TV18 present India on the Move.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Focus, ideate, innovate, enable.